Hey, good morning, everybody. This is Ryan Moe filling in for Joe Vaklovic once again here on Tuesday, March 11th, 2025. Right now, we've got May corn quarter at 474 and a quarter. We've got May soybeans up 4.5 at 1018 and a half. Wheat is down a little bit here in Chicago, down 3 in the May at 559 and a half. Minneapolis wheat down 5.25 at 5.99 under the magical $6 mark. We got Kansas City wheat down 2 3/4 at 5.75 3/4. We've got some exciting news as far as corn exports are concerned. Mackenzie, show us what we got.
So, U.S. corn shipments were strong last week. USDA reported that shipments for the week ending March 6th easily surpassed pre report expectations, totaling 72 million bushels. The print was up 35% compared to the previous week and up a whopping 56% versus the same week last year. Soybean shipments were reported at 31 million bushels. The print was up 21% from the prior week and up 7.5% compared to the same week last year. Wheat shipments fell below expectations at 8 million bushels. The print was down 45% from the previous week and down 55% versus the same week last year.
Very impressive on the corn export side of things. I always look at things in millions of bushels, and when we had the top end estimate yesterday morning was 55.1 million bushels to be exported, and then here we blow the roof off of that by about 15 million bushels to come in at 71.6. Beans being in at the top end of the estimate was also very good, but when you look at our corn export inspections, we're 9% above where the USDA is forecasted. On the bean side of things, we're sitting there at 2% above expectations. I think that's pretty darn impressive once you consider that we are in a trade war. And when you look at the charts and you look at where we're at, we continue to see strength. Another benefit of yesterday's report out of the USDA was that we didn't have just a one-headed monster here in Mexico being our biggest counterparty. We had Japan in there as well, South Korea, and so it was a nice mixture of clients that we had in the corn export sales. So something that I think is very, very positive, that even in the middle of what is supposedly being a trade war, we're continuing to have good, solid export inspections. We always want to make sure that people recognize that export inspections are far more important and far more significant than export sales, because export inspections means that those bushels and tons, they're gone. Export sales can be canceled. It's really hard to cancel something after it's been put on a rail car or vessel and it's out of here.
Canola prices are taking a major hit after China imposed tariffs on canola oil and meal, as the market is struggling this morning, but not nearly as bad as the limit down route that we saw yesterday. Over the weekend, China slapped a 100% tariff on oil and meal as a response to the 100% levy Canada put on Chinese electric vehicles, which is similar to the tariff that the US has on Chinese EVs. As of right now, seed is not included in the tariff conversation. Canada crushes about half of its annual crop, and approximately 40% of its seed is exported to China. With 95% of the canola exports going to the US, Canadian producers are in a bind. Today, we will have price limits of $40 because of only being limit down in May yesterday.
Yeah, this is a really, really unfortunate situation that happened to canola producers yesterday. This morning, we're down here again. We're only down about 3.5 at the moment, which is not nearly as bad as what we saw yesterday with the limit down. As of right now, the most significant part of this story is that seed is not included on this, and that is what most of the exports for the Canadian farmers are to the Chinese, is the seed side of things. We want to make sure that that stays out of this. Uh, as I was talking to some analysts yesterday, some guys in our Canadian offices as well as our Australian offices, they are of the belief that the oil tariffs that they have with the United States are going to be harder on the Canadian producers than the Chinese oil and meal tariffs. However, it's just another one of these conversations that in production agriculture, we want free markets, and free and open markets is going to be our best option. We did see some tweets out there. I don't know if this is confirmed or not, but there were some outfits out there yesterday that were going no bid in the commercial space just because they weren't sure whether or not they were going to be able to protect themselves with these limit moves. With that not being a limit move this morning, it might not be an issue, but we'll see. Hopefully we can get some traction in this canola market sooner than later.
Brazil's soybean harvest is progressing at a faster pace than last year. According to well-followed private group Ag Rural, as of last Thursday, 61% of the crop was harvested, up 11% from the prior week. During the same week last year, farmers had harvested 55% of the crop. There are still concerns about soybean yields in Rio Grande do Sul due to hot and dry conditions. Ag Rural also reported that as of last Thursday, 92% of Brazil's second corn crop had been planted, an increase of 12% from the prior week, but just shy of last year's 93%. With planting nearly complete, farmers in several Brazilian states are concerned about crop development due to hot and dry weather.
Never underestimate a farmer. If you remember correctly, it wasn't all that long ago that we were slightly behind in this category. The concern on that was that the soybean harvest was going to come off slowly, which was going to put the Brazilian producer in a position to where they were going to miss their magic window on safrinha corn planting. It appears that everything has caught up, and it appears that everything is going well. This even stemmed from even earlier when we had a later than expected soybean planting season. However, farmers get it done. They got it done down there, and it doesn't matter where the farmer sits or what country they're in or what language they speak. They always seem to get it done. So it'll be very interesting to see how this crop progresses here on the safrinha corn side. We have a pretty good idea as to what our statistics look like for the size of the soybean crop, which is going to be huge. It's somewhere between 168 and 170 million metric tons. And as it sits right now, their corn crop is off to a great start. But as we know, it's a long growing season and it's far from in the bin.
USDA will release its monthly crop production and WASDE report today at 11 Central Time. Today's report is typically uneventful. However, traders will be watching to see if the USDA adjusts its data to reflect potential changes in trade policies. Analysts anticipate a reduction in U.S. corn ending stocks, while soybean stocks are expected to remain largely unchanged. No major changes are forecast for South American crops.
Yeah, this one is typically a nothing burger. We've said that in the past about the December report, and that one really got things rocking and rolling. So we don't ever want to say never. However, when we do want to look at what the ending stock situation is as far as corn is concerned, there is some chatter out there that they will be taking some away as far as supply is concerned because of maybe a little bit of a boost to ethanol production. In the premium content, I put out there a chart that showed the crush margins here at an ethanol plant over the last year have been negative, over the last quarter so far this year have been negative. So maybe there is some incentive for some of these ethanol plants to slow down. We've seen some go offline. So we don't really know what they're going to put out at 11 o'clock Central today. We're just not expecting it to be all that exciting. On the world ending stocks scenario, wanting to go ahead and see if they're going to make any adjustments to the Brazilian soybean crop. I'm not really sure if they're going to. And like we've said, as far as the corn is concerned, it's just too early to tell. And so we don't want to get in there and make a big prediction yet with that crop just freshly coming out of the ground.
The stock market tumbled on Monday amid recession fears. The Dow Jones declined by 2.1% and the S&P 500 fell 2.7%. A steep decline in tech stocks caused the Nasdaq to drop a whopping 4%, marking its worst session since September 2022. The sharp losses were driven by growing concerns over how President Trump's proposed tariffs, spending cuts, and geopolitical shakeups could affect the economy. Over the weekend, Trump refused to dismiss the possibility of a U.S. recession this year and said the economy is going through a period of transition. Economic fears also caused the 10-year Treasury yield to decline to 4.2% on Monday, down substantially from its recent 4.8% peak.
Woof. I mean, that's been a pretty gnarly ride as far as stocks were concerned yesterday. When you look at where we're at as far as the Dow is concerned, we got what was called the Trump bump right after the election took place. And what we have experienced in the last couple of weeks is the complete erasing of that. We are now right at where we were at, right around the election time. And it is a very volatile market. Although when you look at how far the stock market has moved in the last couple of years, it's really been something of wonder. So in order to have a healthy market, we have to have these corrections from time to time. And the Nasdaq yesterday did enter into correction mode, as far as the technicians are concerned. It's not a great sign right now, but it's also one of these market dynamics that markets have to go up, markets have to go down. It's healthy. This is just what they do. And right now, the market momentum is certainly favoring the downside.
We had a couple flash sales yesterday. U.S. exporters sold 5 million bushels of corn to Japan for delivery during the current marketing year. Exporters also sold 7 million bushels of soybeans to unknown destinations for delivery during the current marketing year.
We'll start with the soybeans first on this. It is typically a market scenario where unknown is China buying through another desk. Supposedly, we are, in the heat of a trade war with China, and if unknown is still coming to the marketplace or coming to the U.S. marketplace more specifically for soybeans, that says something. However, we don't have confirmation that unknown is China, but in the past, that's usually been a pretty good indication. Also, we continue to see export sales of corn getting made. Again, here comes two vessels to Japan. We love to see these kinds of things. It diversifies out who our buyer base is, and those are things that are very good and very healthy for the overall market.
Cattle futures were higher once again on Monday. Live cattle were 30 cents to 75 cents higher. Feeders saw gains ranging from 7 cents to $1.40, with the exception of the April contract, which lost 22 cents. Box beef continued its upward trend on Monday. Choice was up 268 at 317.58, and select was up 115 at 306.95.
As we sit right now, Dow futures up 126. We've got NASDAQ futures up 96. If we're looking at the gold market, gold's up about 17 right now, and silver is up 45, with our friends in the NYMEX crude oil trading pits up 67 cents, with crude trading at 66.71. Everybody have a great day, okay?